we started Qolo, I mean, one of the things that I observed across my 20 years in payments is that it's the moat for most companies that are payment providers or banking core providers is it's hard to leave us. And by the way, it certainly comes into play from an investor lens as well, because it's often thought of as a great thing. What we don't want that to ever be, why we created Qolo, is that the customer experience and the problems that you're solving, you should want your customers to stay with you and to continue to grow with you because you are providing something of value, not because it's difficult for them to figure out another solution.
This is the FinTech One-on-One podcast, the show for FinTech enthusiasts looking to better understand the leaders shaping FinTech and banking today. My name is Peter Renton, and since 2013, I've been conducting in-depth interviews with FinTech founders and banking executives. My guest today is Patricia Montesi, CEO and co-founder of Qolo, a payments infrastructure company that combines card issuing, money movement, and a bank-grade ledger on a single API-first platform. Patricia's path to payments is unconventional to say the least. She spent 9 years at the corporate headquarters of Alamo and National Rental Car before being recruited into a payments fintech with zero industry experience. And that outsider perspective shaped everything about how she eventually built Qolo. In our conversation, we talk about why she set out to solve payments fragmentation at the infrastructure layer, how Qolo's 3-product suite works together, their dual go-to-market targeting commercial banks and B2B fintechs, and how winning KeyBank as both a client and strategic investor validated their approach. We also get into how the Synapse debacle changed the conversation around ledgering, how Patricia thinks about AI inside Qolo, and what's behind the 130% year-over-year growth. I hope you enjoy the show. Welcome to the podcast, Patricia.
Hi, Peter. Thanks for having me.
My pleasure. So let's kick it off by giving the listeners a little bit of background. I'd love to kind of get the arc of your career. What are some of the highlights you did before you got to Qolo?
Sure. I actually spent 9 years doing car rental. I performed a variety of functions at the corporate headquarters for Alamo National Rental Car. Started in finance, moved across to sales and marketing, and had a lot of great experience, a real good training board for springing off and doing lots of other different things. And believe it or not, my next gig was actually a complete switch in terms of industry. And I ended up being recruited into a payments fintech company and knew nothing about payments at the time. But I was fortunate that I had seen, what a global rental car firm looked like, what it felt like, what it was like to see great and good. So it gave me a very interesting business background. So when I came into payments, I had a lot to learn about payments itself, right? And how it all works underneath the covers. And I remember being walked through the 4-party model a few times, and I said, I finally got it. And then they said, okay, well, now we're going to reverse it. And I was like, oh my goodness, like now you guys are going to drive me insane. Our company at the time, it was called Wildcard Systems. They actually were looking for business folks that could run, client-facing roles that were not from payments. So they wanted a fresh set of eyes and ears to say, this is not how it always has to work. And I came in with that perspective. My perspective was, tell me how it works today. And then I could bump that up against a whole different view of experience and say, well, why, right? I could question everything. And I think that at the end of the day, that actually helped us over time in my career in payments. Once I was, comfortable in payments, I hung on to that attitude, right? And so I didn't want to become another one of those people that said, well, that's the way we've always done it. So it actually obviously led me to start my own company in payments and take all of the lessons that I learned over the years and pour into little Qolo.
Right. So what was the core insight that you saw that really prompted that decision? Can you sort of break it down for us?
So what we saw was that there was a couple missing pieces and a focus on, the next rail or the more modern payment rail. And there was a lot of disruption in what I like to call the point product world, right? So I can do lending better, so I'm going to go out and be a lender and I'm going to disrupt the banks because they're old and they're legacy. Or I can do push to card And so we had a single solution for that, or I can do ACH better than legacy. So our view of the world was that's all fine and great. It's progress. But without this underlying ledger or this underpinning ledger that connects all of those rails together, then it really gets folks into a tricky situation, because then if you want the most modern platform, you end up going and stitching together point products in an ecosystem, if you will. And it can be done. It has been done for years and years. But our view of the world was that overcomplicates everything, and it shifts the burden over to the business to figure out how to unify your service, unify your system and your reconciliation, and understand where all my money is. So the way we said about it was, number one, out of the gate, was we wanted a simplified system that was not just modern, but also had the bank grade ledger underpinning all of the rails. So in essence, we're rail agnostic. We can move money over any rail. The power of building the underpinning ledger is that then you can see where your money moves. It's all about origin and destination and transferring in between. And so that was our whole entire vision, was that you don't need to go out and build all this stuff yourself or code around the inefficiencies of your legacy providers. If you get it on one platform, then you can focus on your customers, your sales, your marketing, et cetera.
Yeah, that's a fairly ambitious way to start a fintech, I would say, because that really, by building that core ledgering system, that's like the most complicated piece. And that was where obviously we had all those challenges a couple of years ago with the whole Synapse debacle, which was really all about bad ledgering for the most part. So anyway, but I don't want to dwell on that. Why don't you talk about the product suite today? How do you describe Qolo today?
Yeah, so today we talk about Qolo under three veins, right? We again combine card payments, both modern and traditional payments, and ledger on a single modern API first platform. The way we've productized Qolo is that we have what's called quantum ledger. And then the second part is this cascade money movement. And again, the notion is, how do I move and transfer money with ease and with transparency? And that's what the money movement piece of our platform does for our customers. And then we also have Qinetic card issuing. And so on the card issuing side, we did it, again, all of this is at the infrastructure layer. We didn't do it sort of using other parties underneath us for the core processing. All of it is direct first party Qolo work. And I think that, those three things combined are what gives, whether you're a commercial bank or a fintech, it gives all of these folks another way to put together the system of payments in an embedded fashion, where they're not out searching all the time for the next modern rail or the next modern way of sending money or non-fiat money or stablecoin, et cetera. So we look at our platform as a comprehensive money movement, payments, and bank grade everything underneath it all.
So then would you describe it like as a side core for a bank? That's become a kind of a popular term these days, where you're not actually ripping out the bank's core, but you're kind of interacting with it on the side, shall we say?
We often get mistook for that, because you're right, it is, everyone wanted to solve the, how do I not rip and replace for a bank, right? The bank's ripping and replacing of cores is multi-year, multi-million-dollar journey that's extraordinarily disruptive. So the sidecore does offer and solve some of those problems, but we're different in that we overlay the existing legacy systems and we're integrated into their core as well. So if you think about sidecore as almost an entire separate stack, and has separate compliance stuff built in, it has separate risk appetites, et cetera. It is literally in parallel. Ours is within. It's over the core. It's within the core. It actually is truly not a separate system that has to convince the bank or make the bank have changes to their compliance and risk departments, et cetera.
Right. But so you are then interacting with the bank's existing core. And so you obviously have tight integrations with all of the big three, and I presume some of the other, the more newer core systems. Is that right?
We have integrations into all the cores that our current banks are using. And for us, whether it's one of the big three or not one of the big three, we're sort of agnostic to it. It's not a big deal for us.
There's lots and lots of payments rails these days, beyond obviously the card rails. We have all of the real-time payments rails. We still have the traditional ACH, RTP. So did you decide on this like from the get-go? Was this sort of in response to market demand that you would kind of handle every rail?
Yeah, for sure. This was our original vision was always around offering up as many ways to pay in and as many ways to pay out as possible. And that includes traditional, it even includes check, which again, believe it or not, we've been talking about the disappearance of check for years and it still hasn't happened.
I should have mentioned checks.
Well, I mean, it makes you, yeah, I'm a fintech and we support checks, right? It always sounds so odd when it comes out of your mouth. But when we built Qolo and the design and the thesis was around trying to solve for the most complex use cases. To your earlier point, it was a very ambitious thought that we had in our head. And there was a lot of founding around that because what we thought was that people were, the market wanted to use as many ways in and out as they possibly could. But what they were having to do or forced to do is, again, go out and build a multi-fragmented vendor solution in order to do that. So for sure, we wanted to have as many ways to pay in and out as possible. Again, we wanted all of them to be at the infrastructure level because we didn't want to rely on another third party. And I think, the beauty of the designing it up front that way is that we are agnostic to whatever rails there are. And if the next new one that comes along is just like adding another outer layer to our platform, there's no internal plumbing that has to be redone, no recoding. That's what we, at the time, it's we do, again, traditional check, ACH wire, RTP, push and pull from card, all of those things. For us, again, it's just another rail.
And so then are you mainly, are banks your core segment that you're really focused on, or who else are you selling to?
No, we sell to fintechs and banks, both. We actually love having this sort of vertical solution and GTM, even though, quite frankly, what's cool about it is, again, the underlying platform that we use to service banks or that we use to service fintechs, it's not different at all. They might be called different, vernacular or names. Banks call a ledger, a virtual account management, and fintechs call it a virtual ledger. So there's lots of different nomenclature out there. But as far as we're concerned, we have two GTM focuses. One for sure is commercial banks, and the other one is more on the B2B fintech side. Our platform does support consumer programs, but we just, from a refined GTM perspective, we didn't think that was the best place for us to focus. We think a lot of the winners have been anointed already. And there's a lot of risk associated with that, adoption, regulatory, everything else. So on the fintech side, it's really around corporate payables, ARAP automation, commercial credit, expense management. Like those are the areas that we focus on. And then on the bank side, think of them in the same way that we're basically enabling the banks to sell into commercial accounts and fintechs themselves, right? So small,
Right.
medium-sized businesses, it's using the same technology. And frankly, we consider them almost a distribution channel in many ways. We have, these banks have all of their payments advisors feet on the street out selling virtual account management, and it's what we power. So for us, we like the fact that they're fairly different motions. We'd like to keep our finger on the pulse of fintech always. So our fintechs are just as important to us as our banks, and we can do both with the same platform. So why not?
Okay, so then in the conversations with the banks, I mean, the ledgering piece, virtual account management, whatever you want to call it, with the whole Synapse debacle, where ledgering was so front and center, was the conversations with banks different for you guys because you have that ledgering product?
I think for sure that whenever pre that event, when people talked about ledger, the question was, when we talked about the fact that, our ledger is bank grade, dual entry, forward posting, blah, blah, all this stuff. And everyone would say, well, we have a ledger too. And it's like, okay,
Right.
in each monoline point product, card issuers out there today have ledgers. They're just very basic ledgers and they support cards, right? And so I think that event it did really shine a light on certainly banks and fintechs working together and certainly saying who has the system, not who is the system of record, who has the ledger, who owns it, where's the money at any given point in time. Huge difference because, by the way, in not just the banks, investors, fintechs, everyone was like, wait a minute, right? So for everyone paused, right? And said, well, hang on, we work with fintechs. Whose ledger are we using? Are we using theirs or ours? Or, oh, wait a minute, what do you mean it's only a basic ledger? It raised a lot of the right questions, frankly, for everyone to have been looking at in the past. And it's a simple word. I mean, people think it's a debit and a credit, and that's your ledger. And it's so much more than that. You really got to peel back the layers of exactly what your providers have to understand if they do truly have a bank grade real time ledger.
Okay, so I want to talk about user experience because that's a huge piece of any offering, particularly around money movement, because people want seamless, people want fast, people want few clicks. When you're going in and sort of pitching your products, I'd love to kind of get a sense of the underlying infrastructure that you've built. How does that provide a seamless user experience?
Yeah, I will say, Peter, when we started Qolo, I mean, one of the things that I observed across my 20 years in payments is that it's the moat for most companies that are payment providers or banking core providers is it's hard to leave us.
Inertia is a very powerful force.
And by the way, it certainly comes into play from an investor lens as well, because it's often thought of as a great thing. What we don't want that to ever be, why we created Qolo, is that the customer experience and the problems that you're solving, you should want your customers to stay with you and to continue to grow with you because you are providing something of value, not because it's difficult for them to figure out another solution. So that was the philosophy that we started down the road with. And I think it takes a certain level of experience in payments and banking to look at our platform and understand the true difference and why the experience becomes easier. I mean, we have modern API first companies. So, high tech fintechs appreciate all of the way we've designed our APIs. So do banks. But I think what they really, once they start to understand the power of how they can leverage the platform and leverage the quantum ledger so that, again, we take the heavy lifting out for them, all the stuff they used to have to do when they had 5 vendors doing the same thing as Qolo can do. It just cleans up their whole world. It simplifies their whole world. And again, to grow with them even more, they come to us and they say, well, what about stable coins or what about this or what about that? And they find out really quickly that it's fairly straightforward exercise as long as the use case makes sense for and the work and the heavy lifting isn't there like it is in the roadmaps of all the legacy players, because they might say they're going to do it, but it's going to take them a long time, and they're going to have to sort of duct tape the old system to the new system, and it just
Right.
that's where things fall apart, is in all of those gaps.
So I want to talk about like some examples that I've read that was available publicly. Obviously, KeyBank, Huntington Bank, they're both, I believe, clients as well as investors, which means they really must believe in what you guys are doing. So maybe start with KeyBank. Tell us a little bit about how that came about and what you've done for them.
Sure. I mean, we were invited late to the party of an RFP for virtual account management. And I say we were invited late because through some of the connections we have in the market, I was introduced to KeyBank, and I started talking to them about the Qolo platform and the ledger and everything. And they're like, oh, wait, hold on. Like, this is exactly what we're looking for. And I love the KeyBank team. They really punch well above their weight as it relates to being innovative and on top of fintech. They've been investing in fintechs for decades and working with fintechs for decades. So they really were a great first bank customer for us to have. So we won the RFP up against some huge players, huge names that you would know about, even other, startups. So when we won that business and were able to, launch the virtual account management system within 9 months, and then shortly after that, we're on the cusp of launching all of their commercial card business as well. Then they wanted to strategically invest in us because they consider us, and I would say the same thing applies for Huntington because it's a very similar set of products that we have out for each of them. They consider us strategic to their future for commercial payments and modernization. So it is sort of was a natural follow on that they wanted to invest in the business and make sure that we were linked at even a more elevated level, is how I would look at it.
And so how are they using the virtual account management piece? I read that, it's processed billions in transactions since it was launched. Tell us about their demand for virtual account management. What are they actually using it for?
Yeah, so the entire thesis for KeyBank and a lot of banks like Key is that how am I going to protect my commercial base of business? How am I going to protect my deposits? There are modern products that exist in non-banks that are taking away from their share of the deposits from their commercial clients. And or obviously the large top 5 banks, if you're a key bank and you're not able to offer competitive modern products to your commercial accounts, they're going to move. They're going to move it to a bigger bank that has that, or they're going to move it to a non-bank. So think about all of the AP automation products and expense management products that are out there today. It is really and truly leaving the deposits at the bank and going somewhere else because the product and the mechanism makes that corporate treasurer's life a lot easier. What Key recognized and what Huntington recognized is that we have got to offer that and be competitive. Otherwise, we're losing not just customers, we're losing the deposits. So how do you retain the customers with a modern offering? How do you then also drive growth from that and keep the deposits in your ecosystem? So if you're offering a virtual way to open accounts and it's very flexible and modern, it's easy to set up. It's flexible down at the end level of subledgering. So this makes a corporate treasurer's life a lot simpler. And then all of a sudden you say, oh, now we also have a modern card product that you can use for supplier payments, expense management, all these other different things. It helps them keep the deposits in the ecosystem because they will tell you that they're losing deposits and share to more modern solutions.
So let's talk about the card product because, I mean, do you have many of your clients using just that? Because obviously that's a massive category in and of itself. And do you have like a product suite similar to some of the big fintech names in modern card issuing?
Card is near and dear to our heart. We kind of grew up card first. So card issuing is super important to us. Most of our clients, if not all, I think not all, but most have a card product, whether it's virtual or physical or both. And we do debit, prepaid, credit, tokenized, non-tokenized. So we do support all of the things in the card world in a very modern way. I think what's been attractive to these fintech clients is that you can not just use once you start using the card product, you realize, oh, with this underpinning of Ledger, there's so many other things I can do. Just hosted a client in Fort Lauderdale and we're talking to them about Ledger and money movement. And they had like some aha moments of like, they take money in for their clients. They have, corporates wiring in money for an expense management program or wiring in money for a commercial banking product. So how can I do that more effectively? Well, we can help them with that. And so they're able to understand like, oh, it isn't just the card issuing. I can then move money in and out in a much better way than I can with any other supplier.
I want to talk about competition just a second, because I think it always fascinates me where you're going up against, some big name fintech companies, you're going against some of the legacy providers. The core banking providers are probably thinking they're in the mix as well. What is it that sets Qolo apart that allows you to win deals against much larger incumbents?
I think if we take it from the bank lens for just a moment, like the commercial bank side, I think, first and foremost, like, can I avoid ripping and replacing my core? I think there was a lot of the big legacy players that came out and introduced their modern cores. And I think that, frankly, didn't feel... Sorry, Peter. It fell a little flat. That's all I'm going to say.
Okay, that's fair.
And so I think a lot of people have. This is not easy to do, and I have a tremendous amount of respect for all the legacy players. So don't get me wrong. I just think that we always felt like the bolt on. Like once you have something built and then you try to bolt stuff on, it always becomes a little bit of the house that Jack built. And doing ground up makes a big difference. But I think when we're out there in that competitive landscape on the bank side, I will say for sure, where we come up against the legacy players because they're in the mix either with their legacy core and or a promise of a modernization layer. And then we're also up against some newer entrants that are saying we are, again, we're a layer on the outside or we're a sidecar. So how do you sort out who does what, right? And I think that it becomes really interesting to educate people. And, sitting at one of the top 50 banks in the US was a comment that if you ask everybody in this room what virtual account management means, everybody's going to have a different answer. So it's right. A lot of the education around what exactly do you do? Where do you stop and start from treasury management to core, and beyond? Like that is what really the education is out in the market is talking about. Like, cause you look at a couple people that, won't name names, but you look at a couple people and you're going to be like, well, they do what you do. And then you dig deeper and you're like, well, no, they don't. Actually, they do this part and we do this part. So it really is connecting dots all the time and educating not just the prospects, but, existing customers as well, like just to make sure they understand the difference of what we provide versus what others provide.
So we haven't mentioned AI yet, and I'm on your website and you don't mention it on your homepage at all. So I presume that's not an accident, but I feel like I can't have an interview anymore without at least touching on this. So Are you using it inside your products, your customers? Is there an AI intelligence layer that you're working on? How are you kind of thinking about it?
Yeah, and our website always lags behind, so I shouldn't say the last thing to get updated. But yeah, because everyone wants to put AI on their homepage. I mean, we take a very forward approach and think about AI. We have embraced several AI products. Some of them are as basic as saying like implementing Glean so that everyone's day-to-day work can become easier across all of the multiple providers that we have, right? Take your CRM and be able to actually more effectively mesh that with data sitting over in your product app, et cetera. So for sure, we've embraced it very early on. Obviously, on the coding side, it is huge. I mean, it is huge, and I think, I think if you, from that perspective, to your point, if you don't do it, everybody else is going to do it, right? So you have to keep up. You have to be in line with market. We just launched Claude. We have been using AI within our engineering team for a while. Now we're starting to do it more than less. So from our perspective, you have to use it in the right places to survive, because in payments, it's always been very difficult to scale up and not have to scale people and hard expenses. And I think that the golden opportunity is in that area, right? Because how do I win 20 clients and not have to hire X people? And I think that's really a huge advantage for us, is that we're looking there first, right? And it's not to say that people aren't important, right? It's just to say that we basically look at our team and say, help us get there, help us understand how we cannot add more people or the same pace of people, right? So that it erodes your margin. Can, certain functions be, AI inserted, right? Like, do you need RevOps full-time person if you have this, and this done through AI? Like, those are the things. We have a little program that we do in Qolo called Turning Hours into Minutes. And it is showcasing, everyone gets to showcase their, what did you do with AI that made your job better, faster, and or made an experience for a customer that much more exciting. So we have like little showcases within the company. So it's really important to make sure that we're staying modern, staying live, etc.
So can you give me a sense of the scale you guys are at today?
Yeah, we have 25 plus clients live on our platform. We process, I think you said the number, over 60 billion in transactions through our BAM solution. That actually equates to about 130% year-over-year growth. So year-over-year growth is a huge metric for us. Net revenue retention is another one, where we came in at 142% net revenue retention. Very important for us, because it's not just about our clients, it's about our clients' land and expand type of business. And that's what we're seeing from our customers that have renewed. Our early customers are renewing and expanding and growing. That hopefully gives you some sense of the scale.
Yeah. So then what's next for you guys? What are you most excited about as you look ahead for the next 12 to 18 months?
A couple of things. Number one, we are staying on top of AI and making sure that we remain competitive and use AI to help us everywhere, not just from an automation and efficiency perspective, but potentially in certain products as well. And then we're really thrilled with the trajectory that we're on in the banking channel. We do think and we do see that virtual account management is a very hot topic. So there's a lot of momentum in the bank channel. I also think that carry on from the ledger conversations and the Synapse conversations, that's really propelling a lot of this to be where it is today. So we want to continue to take advantage of that momentum and be able to service our clients in the banking space in a lot better way. I also think, we always, until we brought on certain people in our marketing department, we quoted as being the best kept secret in payments from Ken Gabberty at KeyBank. And no, no,
You don't want to do that.
yeah, I was like, that's not a badge of honor at all. And we knew, right? We recognized it. And one of the points you made earlier is like, what we were taking on was ambitious. And I think, again, it was sort of people understanding what value Ledger even provided. So all of the things that were happening in the market at the same time that we weren't marketing ourselves. And then now all of a sudden we're in a nice place where it's like, oh, now it's all coming together because the market understands the importance of having that bank grade ledger. We brought in talent from a marketing perspective that was actually able to convey that message out. So we're super excited about actually investing in sales and marketing, but the social proving that we've gotten from the banks and the clients themselves has just really helped propel our momentum even further.
We'll have to leave it there, Patricia. It was really great to hear your story. Thanks so much for coming on the show, and best of luck.
Thanks, Peter. Pleasure.
Something that stayed with me is how Patricia got into payments in the first place. Wildcard Systems didn't hire her despite having no payments experience. They hired her because of it. They wanted someone who would ask why, not just accept how things had always been done. And Patricia held on to that mindset through 20 years in the industry and all the way into founding Qolo. Most fintechs hire for domain expertise. The more interesting question Patricia's story raises is how much of that expertise eventually becomes a ceiling. Anyway, that's it for today's show. If you enjoy these episodes, please go ahead and subscribe, tell a friend, or leave a review. And thanks so much for listening.